This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to the Research Talks here with Alan Green. And this must be his historical Research Talks, Alan, I think, because what's happening on Sunday? Hey, now I'm not a football fan at all, but I can't help but get excited about this. I'm sure you're very excited.
I'm hugely excited, Mark. Hugely excited. And yeah, a lot of controversy over the penalty the other night. But I think on balance, anyone looking at that game will see that in the second half, the Danes had, in the extra time rather, the Danes had run out of steam and they were just playing for penalties. And of course, the great thing is with the England team, it's a young squad and there are so many players on the bench that didn't come on that would also have made an impact too. And I think that's where it's so exciting. Yeah, Italy have a huge experienced defence, but I think we have a very good chance of doing this. And, you know, in Gareth Southgate, we trust. What a fantastic manager. And also what a humble guy, too. You know, long gone are the egos of the English Premier League players that played for England, 10, 15, 20 years ago. That's long gone. You know, they're just youngsters who want to play, who love playing, who don't let their egos get in the way and can go out and express themselves on the pitch.
Yeah. Well, I never thought I'd see it, and I remember when it was at Research Talks, maybe 2 Research Talks ago. We were talking about this and talking about Germany, and yeah, you said. Yeah, I've got a lot of faith for it. And I thought, okay, well, we'll see. But yeah, there you go. Your faith has proven fruitful, because here we are, unbelievably. And I think it's going to be a very, very interesting match because you've got, I think, both Italy and England, they play from the heart. You know, there's a lot of passion there, whereas the Germans tend to play from the head a bit more. I think it's going to be a really passionate and exciting game.
It's going to be fantastic, but I think also the key to it. I mean, against Denmark, the keeper Jordan Pickford was a bit erratic. You know, he'd been so solid in previous games, probably because he conceded his first goal. So I think if we can maintain that tight defence and just keep control of it, and I'm really happy with the defensive lineup. You know, I think they're solid, and I think if we can just build from the back, we've got plenty enough talent. And Sterling's been fantastic. So has Harry Kane, and we've got this raft of midfield players, young midfield players like Saka from Arsenal, and of course like Jadon Sancho and others. It's just, and of course Jack Grealish, too. So all of these options, and the further the game goes on, the more you'd fancy England to win, given the fact that they're a young team and obviously they should be able to run rings around them.
Yes, well, I think we might delay putting out the Research Talks on Sunday night this time because it probably won't get very many views.
I think Monday morning is a far better time.
I think Monday morning would be a far better time. Yeah, but let's get on with the task in hand. So we're going to be talking today about Union Jack Oil and Conroy Gold. Now, Conroy we have spoken about before, but they do seem to be making some decent progress with the joint venture. So which one would you like to start with, Alan?
Well, let's start with Conroy, Mark. And yes, of course, we have spoken about both Union Jack and Conroy before. But Conroy, of course, we spoke a few weeks ago about Carillion Diamonds. That's also run by the same management team. Of course, Professor Richard Conroy, emeritus professor of physiology, founded Conroy Gold in 1995, and has also been on the board of Natural Resources PLC, Galmoy Zinc, and many others. The company secretary, Maureen Jones, also on the board of Carillion Diamonds, has been working with Professor Conroy for years. And also as a consulting geologist, there's Professor Gareth Earls and non-execs Brenda McMorrow, Circle Oil, Ivernia, and Howard Bird, also the Southern Area Diamonds and Bregis Gold. Many years of experience brought to this. And of course, it's been all about developing the assets in Ireland. There are assets in Finland too, and of course, the assets in Finland have resulted in being able to share the resources with the Karelian Diamonds projects. But today, it's all about the Orlok Bridge Fault Zone in the Longford Down Massif, which contains Clontebret, Clay Lake, Sleepgar, and several other prospects that are prospective both for gold, antimony, and other elements that are associated with the presence of gold. It's been a fairly tortured route to get to where we are today, and of course there was a joint venture in existence with Anglo Asian last year, which was abandoned toward the end of the year. And of course, the share price action of Conroy has reflected that. If we look at over the past year, we've seen the shares trade as high as 45p 45p back in January this year, and here we are today at 21p. But also the price at 21p is below the placing price. The company, of course, raised 2.2 million in March this year at 33p. At the same time, converted a £380,000 convertible loan into stock as well. But we're still trading somewhere after that today. But I think based on the progress that Professor Conroy and his team have made, I'm very surprised to see it this low. So of course the main area of development has been the Clontebret mine. In February this year, the second joint venture was announced with Demir Export AS Turkey, a huge company based in Turkey involved in gold exploration. The joint venture agreement was that Demir will spend 4.5 million to earn 25% option in the first phase, which of course is the exploratory drilling and development. 4.5 million for a further 15% in phase two, and then to bring Clontebret to construction ready status, whatever funds are required. There's Demir can earn in an extra 17.5%, taking the company up to a total of 57.5%. But of course, that means Conroy retains a 42.5% of the asset, including a carry loan on capital expenditure to take it through to commercial production. Demir also committed to make an additional €1 million cash payment on final approval of the definitive agreement, which is moving closer. Throughout this year, the company commenced some zinc sampling at Longford Down Massif in March, and they identified through the soil sampling up to 3,700 parts per million in zinc over an anomaly which is roughly a kilometre square. And the company also stated with that development that the underlying geology there was consistent with major zinc discoveries around the world. That's highly significant. And of course, that's helped further crystallize the arrangement with Demir. Also, of course, in May, drilling at Clontebret, the initial drilling program was commenced, announced on July the 6th. That's, of course, a few days ago. That's the first hole had been completed at the Clay Lake gold target, Cargalisgaran. Other holes had also been commenced across the Longford Down Massif. And on the evidence of the drilling and the information gleaned from this drilling program, Demir Exports have decided to progress the final agreement unchanged, and indeed that was a statement in the Conroy Gold announcement that they were progressing towards finalising legal terms unchanged from the initial announcement in February, which of course is highly encouraging. It means that Conroy have proven up to Demir what is estimated to be there, and of course that estimate is 512,000 ounces of gold on just part of the Clontebret asset. And don't forget, we've got Clontebret, we've got Clay Lake, we've got Sleeglar and the other assets included within this. So. I think we're seeing Conroy, of course, trade now at 21p, well off the highs announced earlier, and of course that's quite consistent with probably I wouldn't say so much a correction, more of a tailing off in interest in the mining sector over May and June, simply because I think all of the junior mining stocks have enjoyed such a strong run. But as soon as there is further news, when pen is put to paper with this joint venture with Demir, I'm sure that we're going to see the share price rocket back up towards year highs again. And indeed, Mark, as we were saying at the start of the program, Professor Conroy, I think he's a fantastic entrepreneur, and his energy is incredible for a gentleman of his age. But I'm sure he will want to see this come to fruition as soon as possible.
Yeah, I agree. I think so, and it does look like it's approaching that stage. What with the completion of the due diligence drilling, and really, the next stage is getting the paperwork sorted, isn't it? I think, and just getting the EGM called to effectively finally approve and sign off, and then hopefully on we go. But I mean, from your point of view, Alan, you been around a while, and you seen a lot of deals and things go through. What's your opinion of the joint venture deal? Because it does look quite good for both parties, I think.
It's a very good deal for Conroy, and it's a very good deal for Demir. But the structure of the deal. So it's I said 4.5 million. Of course, it's 4.5 million euros. So the initial 4.5 million is to earn 25% option in the first phase. Then another 4.5 million euros for a further 15% in phase two. But it means Conroy retains a 42.5% stake in the in Clontrebret and the project. So I think that's a pretty good deal for Conroy. I guess there's also an element of uncertainty, given, of course, the last joint venture with Anglo-Asian was abandoned. But we've got to this stage now. Drilling's been undertaken, and the Conroy have stated that they expect to progress to final terms without any changes to the initial deal, which I think is very encouraging. If they come back and said we're changing the deal, or we want more of a bigger stake, then of course that would probably sound alarm bells. But I think at this point, and also I did mention too I mentioned Finland, of course, at the outset. Some work was undertaken in March this year to identify for potential gold-bearing structures at Sudankala. And it's through the work that was undertaken in the survey there, they've identified multiple potential drill targets. The site, of course, is close to the 4 million ounce Katila gold mine, which is Europe's largest gold mine. And for that work on that area is undertaken too. So it means Conroy aren't a one-trick pony by any stretch of the imagination, and of course there's the overlap with the Finland operations with the work at Karelian Diamonds too.
Yeah, indeed. And I think the Anglo-Asian deal, yeah, I mean, it was disappointing that didn't go through, but it was in favour of what is a much better deal. But I understand there's possibly some reservations there from people with it actually happened. But it has made progress, we can't deny that, and we'll find out soon enough, won't we, I think.
Well, it really has, and I mean, given everything that's happened, and given the fact that the data that they've got back and the JORC estimate for gold on just part, and again, this is the wording key here, 512,000 ounces on just part of the Clontrebret asset. So this is a huge area, could potentially be much more than that, and yet Conroy currently has a valuation of just 8.2 million, and they raised a quarter of that back in March. So there's absolutely no premium in there at all at the moment.
No, there's a lot of potential upside. Okay, good. Thank you for that, Alan. Let's move on to UJO then, Union Jack Oil.
Yeah, Union Jack Oil and Gas, a fascinating company, of course, run by the executive chairman, David Bramhill. I spoke to David a few days ago, actually. David's got over 40 years' experience in the oil industry. Worked years ago with Petrofina, BP, Shell, Exxon, and of course ran Nighthawk Energy. And also his non-executive director and head geologist, Graham Bull, who's had even longer in the field. Worked for Premier Oil, Sovereign Gas, Chevron, Dome Oil, and so a very close knit team with many years of experience. Now Union Jack has had its ups and downs. Currently trading at 28p, been as high as 64p on the year and as low as 20p. So not far off year lows, but again, the falls have been consistent with the falls in small cap stocks over the past few months. So it's similar to Conroy that we discussed just now. So Union Jack Oil have a portfolio of onshore oil and gas assets in the UK, up in the East Midlands and East Yorkshire. I'm going to go through each one and just there are operators involved in each one. Some of the operators are the same, some are different. Egdon Resources is a consistent operator where Union Jack are the investor into the asset, and the operator is Egdon. That's a fairly common format going forward. And Egdon are certainly the operator in most of them. But the two largest assets at the moment, and the ones which are focusing interest and lots of speculation amongst retail investors. Firstly, there's the West Newton asset, which is in East Yorkshire. I should just say here that if you go to the Union Jack Oil website, unionjackoil.com, there's a comprehensive report and map on each of these assets, well worth looking at. It gives a really clear picture of where the company is at, along with if investors are coming for the first time and they want to find out about the oil and gas and investing into oil and gas, investing into looking at drilling, 3D data, seismic animation, and all of that. There are some great educational videos on the website too to look at. So, well, West Newton, East Yorkshire. There's an oil leg discovered in the Kirkham Abbey Reservoir, which is a large area. There's the base case for 146 million barrels of oil and an upside case of 283 million barrels of oil, plus an upside case of 265 billion cubic feet of gas as well. The West Newton field is split between three. We have Rathlin Energy, which owns 66%. The operator here is Rebold Resources, 16.6%. Union Jack Oil is an investor with 16.6% also. Lots of speculation over this. And of course, with onshore oil and gas development, the care and health, the care and the approach to health and safety is huge in terms of the way the asset is protected, the way the area around the well is lined to ensure that absolutely no pollution can take place from A, getting the oil out of the ground, and B, getting it into the transportation trucks to take it through to the refinery. So that is progressing. There's been a bit of news flow on West Newton, but not a great deal. And really, we're just waiting for further news from that at the moment. The second asset is in Lincolnshire, west of the Humber Basin, and that's the Wrestle asset, spelt WRESSLE. Now here we have seen free-flowing oil taken from the well to the Humber refinery and sold. This is expected when it's fully on stream, 500 barrels of oil per day. But there have been some issues there with the local authorities, which have now been resolved, and through at the moment, Union Jack and the operator here, which is Egdon Resources, I mentioned, Union Jack own 40% of the asset. Europe Oil and Gas own 30%, and operator Egdon owns 30%. There is what's called a prop and squeeze operation underway at present, and we're waiting for sort of further updates on that. Once the prop and squeeze has been completed, then we'll know exactly how safe and whether all the boxes have been ticked in terms of bringing it to the next stage, which of course is producing the oil and or going back to production and transporting the oil out. So, as I say, Union Jack 40% of wrestle. We then come to the Biscathorpe, the Biscathorpe well, which is in East Lincolnshire also. The upside case there is 6.6 million barrels of oil. Again, this is split three ways. Union Jack 45%, Montrose Oils 19%, and operator Egdon Resources again in there at 35.8%. There is work to be done on this, and we'll no doubt have further news on this going forward. We then have the Keddington asset in East Lincolnshire. This is producing 25 barrels of oil per day currently, and there's an estimated 567,000 barrels of oil in the ground, which is a net 311,000 to Union Jack Oil, which is the joint owner here with Egdon. Union Jack Oil owns 55%, Egdon owns 45%. We're expecting 2 more wells to go into the ground at this asset before the year's end. So I think you get a picture of the overall value here to Union Jack. It's got a series of assets, some in production, some coming up to production. 3 more to tell you about. The Fiskerton, which is on the Fiskerton airfield in Lincolnshire. And again, Union Jack owns 20% of this. Operator Egdon owns 80%. There's a stable production, not a great deal, but that's sold to the Immingham refinery. So there's a bit of cash flow there. The North Kelsey asset, which is northeast of the Wrestle asset there that we spoke about just now, drilled in 2021. The upside there is 8.5 million barrels of oil, and the license there has been extended to the end of this year. So we'll be expecting some news on North Kelsey. Finally, of course, the Duke's Wood oil field, which is in the East Midlands. Egdon owned 55%, Terrain Energy 27%, Union Jack Oil 16.6%, and that's a dormant oil field at present, so no news on that. But significantly, in order to boost cash flow and to add another dimension to its operations, early this year, Union Jack entered into a royalty agreement with the Claymore and Piper complex, and this is across the Claymore, Piper and Scapa oil fields in the North Sea. So this is the only offshore oil and gas operation Union Jack have become involved with. And the royalty agreement means royalties are paid from 20% of the gross production across those fields. So Union Jack now owns 2.5% of that. It's acquired that asset, and that will generate over the year a 125% IRR, internal rate of return, and on the basis of the numbers that are coming back from this, payback on this asset is expected in less than 12 months. So we may well see the investment into that paid back by Christmas, and of course then it's just ongoing cash flow to be enjoyed. And I think it's fair to say that more of these royalty agreements are planned by Union Jack going through the year. So just to go back in summary to the share price, the currently got a valuation of 27.9 million, and of course it's been well over double that. But I think here down at 28p, and I think that with also the understanding that the supposed moves away from gas and oil aren't going to happen anything like as quickly as a lot of investors thought they would. I think we're going to be reliant on these onshore oil and gas fields for some time to come, and that certainly, given the developments so far this year, could play very nicely into Union Jack Oil's hands, as it were.
They've got a lot going on there, haven't they? Actually, more than I was aware of. Lots of projects.
Yeah, there's lots of projects, and of course, various amounts of ownership. But again, I mean, I can talk through all these, but I think I'd urge investors to go. They've recently updated the website, and it's a very good website, as I say, with all those educational videos if people are looking to invest into oil and gas for the first time. But there's a very comprehensive summary of each of those fields that I've gone through: West Newton, Wressell, Biscathorpe, Kennington, Fiskerton. There's a summary of each of them, and also very comprehensive maps, so you know exactly where they are. And of course, this is all up in the northeast, across the East Midlands, East Yorkshire, and Humber Basin. So it's it's very close to home. So if you're so minded, and I know a lot of investors are, because you occasionally see on social media people living nearby are posting pictures of huge gouts of flame going up here and there. But of course, that's speculation. But the company has brought us up to date so far, and I think we are due some news in the not too distant future.
Okay, good. And you say the valuation was more than double. What brought it back, do you think? Was it just the crash in oil prices? Did it come from there?
Well, I think they're again at the start of the year, and looking at the share prices of a lot of little resource companies, and these are companies engaged both in oil production, also in mining as well. I think there was so much expectation because of COVID and returning to normal production levels and the uncertainty. I think a lot of these smaller companies were looked at as offering huge potential. But it came back, I think, because there was some delays at Wressell and West Newton, and but those have progressed nicely. And of course, now where we are, I guess the small cap stocks are also suffering a bit from the go away in May syndrome and just general uncertainty on the outlook for now. But the company is now pretty well trading on a year low. So we've got all those assets; they are making progress, and I think there's an awful lot more to come in the next few months.
Okay, so would you think a fairly easy sort of value proposition back to where it was previously, and almost double?
Yeah, very much so. Simply because, as you say, there's so much going on, and I think David Bramwell and Graham Bull between them are vastly experienced, many years of experience and much work done, very well known in the industry. But I think David's chosen to diversify. I described the royalty the royalty assets that they now are in the North Sea, and I think we'll see probably more news on those going forward. David and his team are looking to create a company that's got a diversified spread of assets that generate cash, bring cash into the company, and then of course the blue sky assets that could potentially yield an awful lot more. And that I think is where a lot of the small micro cap companies are heading nowadays. They're looking at oil producing assets or producing assets that generate cash flow, and then of course blue sky assets within the mix too. And indeed, I interviewed another company also in the same field, Mosman Oil and Gas, that was released this morning as well. And again, a very similar structure, a blue sky asset in Australia, a helium asset, and then producing assets, oil assets in East Texas. So I think the structures, the structure and the business case are well recognized and verified through the actions of other companies. So certainly Union Jack, I think, is very well poised and offers very good value at current levels.
Okay. Well, thank you very much, Alan, again, for your time talking to us there about Conroy Gold and Union Jack Oil. And good luck this weekend. And
yes, it's coming home this weekend.
It's coming home this weekend. There we are. Well, thank you very much, Alan, and we'll talk next week.
Okay, Mark. Good talk.
Bye-bye.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.